You are watching Market Watch, the brief overview of the key events from the world of finance. On April 16, 2025, Asian stock markets declined, driven by growing trade tensions between the US and China. Washington's decision to impose new export restrictions on AI chip shipments from Nvidia and AMD to China raised investor concerns. Nvidia shares fell by 6% following reports of potential losses amounting to $5.5 billion. The MSCI index for the Asia-Pacific region dropped by 1.3%, while Hong Kong's Hang Seng lost 2.3%, with tech stocks hit the hardest. Although China's economy grew by 5.4% in the first quarter, investors remain wary of the impact of new U.S. tariffs, which have reached up to 145% on Chinese goods. Nasdaq futures also dropped by 1.3%, signaling further potential market weakness. Trade relations between the U.S. and China continue to worsen. U.S. President Donald Trump launched a probe into the possibility of new tariffs on critical minerals imported from China. In response, China halted Boeing aircraft deliveries, a retaliatory move against the new U.S. measures. These actions have heightened tensions between the world's two largest economies and are sparking concern across global markets. Investors are closely monitoring developments, anticipating potential consequences for the global economy and trade. Against this backdrop, gold prices have surged to a new record, nearing the $3,300 per ounce mark. The rise is fueled by a weakening dollar and escalating trade disputes between the U.S. and China. Investors are seeking safe haven assets amid global economic uncertainty. Analysts at ANZ have raised their year-end forecast to $3,600 per ounce, reflecting current trends. Since the beginning of 2025, gold has gained over 25%, indicating strong demand for protective assets in a volatile environment. The weaker dollar further boosts gold's appeal to international investors. Oil prices continue to decline as investors worry about slowing global demand and growing trade conflicts. Brent fell to $64.49 per barrel, while WTI dropped below $60, a roughly 13% decrease in April. The International Energy Agency cut its 2025 global oil demand growth forecast to 730,000 barrels per day, the lowest since 2020. Key drivers include slower economic growth and increased market supply. Analysts warn of potential further price drops if macroeconomic conditions fail to improve significantly. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.